Well, hello, and I hope your 2025 is off to a fantastic start. Now, I know a lot of you have some big plans for 2025, but today we're actually going to be looking at the real estate market. We're going to be looking at 24 and seeing how it did, because there was actually some good things that came out of it. So let's hop to it. Hi, I'm Jake Tysiak, your bourbon drinking realtor, and today we're going to be looking at the Chicagoland Real Estate Market and seeing what actually happened in 2024. Now, we'll be recapping the year as a whole, but also we're going to be looking at my predictions on what's going to be happening in 2025, so stick around for that. Now, when we look at our average yearly sales price across the entire MLS, we saw an increase of 8.5%, with that number coming in at just over $403,000. Now, with DuPage County, we saw it cross over the $500,000 number, getting up to 503, which represents a 9.5% increase in price. And of course, we have Will County, up 8.6%, with that number coming in at $394,000. So let's really talk about the market besides price. So 2024 was actually quite interesting. Our total sales were actually down a full percent compared to 2023. And with that, it was really interesting because in our spring market, it was actually a slower ramp up. Usually we see a lot of sales going on during that time, but it eased in a lot slower, and we really didn't see those huge highs that we normally see in our summer months. So we really kept off that peak number, and that helped a lot. Now, in the later months, we did see some activity really finish the year strong. So that helped fix things a little bit far as the amount of sales, because other than that, we probably would have been a little bit further down than that 1%. Now, we do look at new listings all the time, and we did see some bumps in those numbers, 3% in the entire MLS. DuPage County, you had a 6% increase in new listings, and then with Will County, 9.4, and that's a huge number. Now, our inventory levels did shift with that, of course. We saw about 5.6% increase across the entire MLS. DuPage County had about 18% increase in inventory, and Will County, 21%. Really helpful from them with those extra homes coming on. Now, with that being said, though, our numbers are still quite low. We usually want to be above 3%, or 3 to 6 months supply of homes for a well-balanced market, and we're still definitely below that in a seller's market. All right, so now that we know 2024's numbers, let's start to look ahead at 2025. Now, I can guarantee you that I don't know everything. Let's be honest, right? We have people all over the place being wrong. Predictions with the Fed, which we'll talk about in a little bit, have been wrong. So let's start off with the 3 things we're going to be looking at today. Obviously, there is the home itself that most people are concerned about. So inventory, we need a house. Now, of course, with that, we're going to talk a little bit about the price. And there's 2 factors really when it comes down to the price. Is one, the price that you're going to pay for it today, but then there's also going to be that price of the mortgage payment that you're going to have for the next 5, 10, 15, 30 years that you live there. That's our second point. Let's start off with inventory. So as I just mentioned, we have been seeing increases in inventory, and I predict that's going to continue in 2025. What we've been noticing is we are seeing more homes, but homes are also sitting on the market a little bit longer, and buyers are becoming a little bit more savvy. So the fact that we have more houses coming on the market will definitely help inventory levels and help relieve some of that pressure that's been pushing those prices higher and higher. And I think it as a whole will create a better situation for most buyers. Now, keep it in mind, if you are a first-time home buyer and you're in that $400,000 price range, it's still pretty competitive, but keep it in mind, it is getting a little bit more relaxed. Now, talking about prices, right? So let's start off talking about the purchase price. Now, because we've been seeing homes sit on the market a little bit longer, for those upper prices especially, people have to be a little bit more cognizant of what the actual price is that the home is asking. Because in this market, buyers aren't going to be willing to just jump out there and pay, because homes still aren't that expensive. We just saw prices going up 8.5%, and that's pushed by high demand. And I think we're starting to get to a point where we have a little bit more balance. Obviously, there's still a lot of buyers out there, and there's a lot of people who want to buy a house. The idea of a same buyer, I think, will be a big focus of 2025, and hopefully prices will start to level off a little bit more as we continue going forward. Now, let's talk about everyone's favorite, the mortgage. Now, this is one where I don't think you're going to like what I have to say. When we were looking at predictions, a lot of people were looking at the Fed. Now, the Fed, obviously, we talk about interest rates all the time, and originally they were thinking that there's going to be 4 rate cuts in 2025, and they've already come out saying that they only anticipate 2. Markets got ruined over that really quick. things change around. But here's the thing, the Fed actually doesn't really control mortgage rates. Here is a chart of the last 5 years of the average percent rate for mortgages. Now, obviously back in 2020 and 21, those were some good times. But here's a rate of the 10-year Treasury note. Look at that, they're quite similar. The 10-year Treasury note is actually really what is most representative of current mortgage rates. But here's the thing, rates aren't going to be coming crashing down. I think most people at this point know 3% is not coming back. But as we keep going, there's always going to be choices that have to be made. And most people now are starting to understand that their mortgage rate is probably going to be about 6.5%. So mortgage rates, I don't see moving much. Honestly, I don't think we're going to get below 6%. And I know a lot of people are hopeful for that, but I just don't see it happening. There's so much turmoil and also uncertainty. And I think that uncertainty is really propping up this market a little bit and keeping those interest rates on bonds a little bit higher, because obviously bonds, unlike the stock market, do have fixed rates to it. And I think that's what a lot of people are seeking right now, is that certainty. Now, along the same lines, housing does offer you that certainty when you lock in that rate and you purchase a home. So keep that in mind. But I think as a whole, 2025 will be good for home buyers and home sellers. Hopefully it'll be really good for us agents as we can get a little bit more sanity back in our life. We need it. But I appreciate you watching, and hopefully these predictions are right. I hope I'm not way wrong, but I've been wrong before. So with that being said, I just want to say thank you so much for watching. Feel free to follow along, subscribe, and I appreciate you taking the time. So I'm Jake Tysiak with Keller Williams. I'll see you in the next one.